It's AFEX time now. We see a flip from what we had last week. The bull is charging at AFEX Commodities Exchange as we see total turnover and volume traded more than 100% higher in the weekend at 25th of April compared to the previous week. And we have Femi Kende joining us now with the details. Hello, Femi. Tell us what happened. Over 100 for two of or more of your commodities.
Hi, good morning. Like you rightly said, we actually saw a significant increase in the liquidity in the market for the reporting week. In terms of the value, the turnover, we actually saw a 156% increase. In terms of the volume traded, we actually saw a 136% increase. And in terms of the numbers of deals, we actually saw a 66% increase for the reporting week. However, a different tone was actually seen for the financial benchmark reported on the exchange, as the AFEX Commodities Index declined by about 1.47% and the AFEX Export Index declined by about 1.27%. For the volume traded across all commodities listed on the exchange, maize, sorghum, soybean, sesame, and sorghum accounted for a significant proportion of the trade, as we actually see maize traded about 4.67 million contracts for the reporting week. In terms of commodities prices, we saw a different tone for some staples and export commodities as compared to other staples listed on the exchange. For maize closed the week at 224 naira per contract, representing a 1.6% increase week on week. For soybean, the commodity closed the week at 427 naira per contract, representing a 3.85% increase week on week. Sorghum closed the week at 435 naira per contract, representing a 3.19% increase week on week. However, paddy rice closed the week negative compared to the previously reported week, as the commodity closed at 232 naira per contract, representing a 6.79% decline week on week. Cocoa closed the week at 1,175 naira per contract, representing a 4.02% decrease week on week. And cashew closed the week at 678 naira per contract, representing a 3.4% decline week on week. Other commodities on the exchange remained relatively the same compared to the previously reported week. For more information about our report, you could actually follow us on our social media handle at AFEX Nigeria or COMEX by AFEX, or you could go to our website at africanexchange.com.
All right, Femi. Well, given this regular feedback you get from the broader market, how has your exchange improved the level of liquidity on its markets?
Yes, so on a periodic basis, the exchange has continued to receive feedback from the broader market on initiative or things we could do to improve the level of activities we experience on the exchange. Number one thing we've been able to, or one of the initiatives that we've actually seen result into a high level of increase in the level of liquidity will be the market making initiative, as currently players on the exchange are able to place order within the exchange price rules and guidelines and that are reasonable in the market, and these orders are matched immediately. So right now we don't actually see a 2-day waiting period, 3-day waiting period before contracts are matched, but because the commodities market on the exchange is extremely liquid as at now. Another important thing that we've been able to engage, or an initiative that we've rolled out that have actually resulted to a higher number of or higher level of liquidity on the market, would be our educational initiative, where on a periodic basis we educate the broader market, retail investors, institutional investors, domestic and foreign guys, or the fundamentals governing the market, or how to actually understand the fundamental play in the commodities market, ranging from how policies affect the commodities or price performance in the market, how international relations with other countries affect the price performance in the market, how weather conditions and production statistics actually dovetail into the productive or the production of commodities in the market, and how these ultimately affect prices. So on a periodic basis, we educate the market participants on these fundamentals, and we try to make them fully have a better understanding of the market. Another important thing would be the availability of research report on our exchange, spanning different or diverse sectors or segments of the commodities market. Some of these research reports will include State in Focus, where we talk about the key producing states for certain commodities. Some of the reports will also talk about certain commodities, detailing the value chain and how players in the sectors or in the value chain interact with one another. So these are initiatives we've been able to engage that help improve the level of liquidity we experience on our exchange.
Yeah, and it's been a while since the FETC's listing on the exchange. How has it performed? How have they performed so far?
So the exchange-traded commodity has actually done interestingly well on the exchange, and this would honestly be related to the skill of the fund manager, because the fund itself is actively managed, and the performance of the underlying commodities. The FETC1 has increased by about, or is currently returning about 18% since its initial listing in December. FETC2 is returning about 25% since its listing in February. And if you look at the underlying, or rather the underlying commodities, the performance of the underlying commodities in the market, you see that maize has returned about over 34% on the exchange since the start of the season in December. Soybean has returned about over 20%, sorghum over 20%, cashew over 50%. So with this in mind, and if you track the level of activities in the physical market, you know that a lot of the processors or a lot of the physical market players are now scrambling to restock their inventory position. So with this in mind, we know that there will continue to be an upward trajectory in the underlying price commodities performance in the market, and we expect that the FETC would honestly follow this trend to close at a positive for the investors.
All right, Femi Kende, thank you so much for giving us the details of how the market fared in the past week. Well, we're still in AFEX. It's still there in Abuja. We have Michael Martins, the portfolio manager, joining us to talk to us about food prices moving from crisis to stability. Hello, Michael. Well, between 2020 and now, the world staple food prices soared to their highest levels. I mean, the war is not helping at this time. Economists believe that the kind of price roller coaster experiences then are likely to reoccur in the coming years. In other words, we're talking about food price volatility that may have come to stay. Tell us, Michael, from your findings, you guys are running the exchange now. What are the interventions that Africa can put in place to mitigate the negative effect of price swings on African as economies and as individuals?
Thank you very much, Ini, for that question. And I think it's very important considering where we are in Africa as a continent. But I think before I answer that question, I think it's important to just set the context, of what has happened with commodity food prices and by extension food crisis too, over the past 2 years and also over the past 2 months. So 2 years ago, we had a COVID-19 crisis, right? And the first thing that happened in response to that was that government started printing a lot of money and giving it to poor people. And what essentially do poor people buy? That's food. That's a demand-side issue, because you have to understand that with food prices and food crises, it can either be a demand-side issue or also a supply-side issue. So yes, the government printed money, gave it to poor people bought food. That's a demand-side drive. Also, at that same time, we also had the restricted movement of people, goods, and in this case, also commodities from one place to another, particularly in areas where they're, largely produced, to areas where they're largely consumed, right? So that's also a supply-side issue, right? So the combination of both issues 2 years ago, resulted in a significant increase in commodity prices. In addition to that, 2 months ago, we also had the Russia-Ukraine crisis, right? So governments, both in anticipation and also in response to that Russia-Ukraine crisis, have also been building up their own food reserve bank, right? So countries like China and also the United States have been buying commodities, like they're buying bread on the streets, right? So that's a demand-side issue. And it's also the case that some of the commodities that are produced within the Black Sea region in Ukraine and Russia have also had restricted movement, from places where they're largely produced, which is the Black Black Sea region, to places where they are largely consumed, which is, of course, the rest of the world. Another problem that also layers into that is also the high fertilizer prices that we've also had, due to the high price of natural gas and also urea. That would also set the tone, right, for what we will see for the next commodity trading season. But with regards to what we are currently seeing now, I think that sort of gives the context with regards to what has happened, in the commodities market globally over the past 2 years and also over the past 2 months. In terms of interventions that we can put into place as a continent in Africa, I think that they're broadly distinguished into two. So first, you have the short-term intervention, which would basically be for countries in Africa to build up their food reserve bank, right? So countries like Nigeria that have done, the strategic grain reserve, we would expect that same type of solution to also continue, at least for the short term, even though that would have a significant increase, effect in, on the prices of commodities, seeing that commodity prices would rise in the short term. But if governments are able to come up with those type of programs across board, across all the different countries, right, that would help modulate commodity prices over the course of, let's say, a 9-month period, which is the commodity trading season. In terms of long-term interventions that can be done, I think it's safe to say that the structural issues that exist within the commodities ecosystem do certainly need to be addressed. So issues surrounding, production, financing, and then also storage, right? So if you do a proxy analysis of the agricultural production value for 10 different agricultural commodities across 10 different countries, that value stands at approximately 45 billion. If you compare that with what the agricultural food import bill is, which is about 40 billion, what that tells you is that as a continent, we are importing nearly as much as we are producing, which is not a good thing. In addition to that, it's also, according to Dalberg, about a $65 billion agricultural financing gap in Africa as of today. So those are three structural issues that do need to be addressed if we are serious about addressing, the food crisis. There's also the idea of shifting the economy away from, commodities of focus into alternatives, because what is fundamentally important is the consumption of calories and not necessarily the foods that are consumed. Another issue which I think would also bring into bear your next question would also be the adoption of market-based risk management systems, which is, of course, the derivatives that we are building on the exchange. Because what happens in developed countries is that there are, futures and also forward contracts to which different participants can sort of edge their risk in the commodities market. That doesn't currently exist at scale within the African continent today.
All right, Michael, this will be very brief now. What are some of the immediate steps that can help generate more and better information that is needed to allow greater transparency in trade on future market? Just briefly, Michael, we're almost out of time.
To be honest, I think that the simplest and probably the most important thing right now would be market education, right? So every single participant in the commodities market needs to be fully aware of the benefits, right, of trading, derivative contracts, futures contracts, such that they are then able to edge, whatever position or whatever exposure that they have, in the commodities market. And this would apply to not just only the smallholder farmer, but also to processors who need these commodities on a day-to-day, and also to investors who are trying to play within the middle of those two different participants.
All right, Michael, knowledge is power, and I think that applies everywhere. Thank you so much, Michael, for that load of information from AFEX, and we do wish you the best. Of course, we want to put an end to the food insecurity in our space.